MicroStrategy was founded almost 35 years ago and existed for most of its history as a little-known software company focused on business intelligence. But in 2023, the stock has soared 337%, making it one of the biggest gainers in the U.S. among companies valued at $5 billion or more, topping Nvidia's 234% rally and Meta's 194% surge. Unlike its tech peers, which rely on revenue growth and market share gains to fuel their stock prices, MicroStrategy's investor appeal is almost exclusively due to Bitcoin. The company began buying the cryptocurrency in mid-2020 and has since amassed roughly 174,530 bitcoins, worth about $7.65 billion as of late Friday. Wall Street is so enamored by the story that the stock has about doubled Bitcoin's gain this year. "It's really Bitcoin," said Joseph Vafi, an analyst at Canaccord Genuity who has a buy recommendation on the stock. "All the other stuff is healthy and doing a good job, they're not neglecting it. It's doing well, it's leading software in its sector. But it's basically something we don't have to worry about." MicroStrategy's market cap is $8.5 billion, meaning 90% of its value is tied directly to its Bitcoin holdings. When Bitcoin plummets or soars, so does MicroStrategy. In 2022, Bitcoin's 64% drop pushed MicroStrategy down 74%. Even after its huge pop this year, MicroStrategy shares are still below where they were trading at their high in 2021, during peak crypto. The Bitcoin strategy dates back to July 2020, when the company said it would start putting some of its cash towards alternative assets, including digital currencies. At the time, MicroStrategy had a market cap of roughly $1.1 billion, built on a software business that had been shrinking since 2015. Annual revenue was just under $500 million, and profit was minimal. At the halfway point of 2020, MicroStrategy had just over $530 million in cash and short-term investments on its balance sheet. Co-founder Michael Saylor, who was CEO at the time, saw that money sitting virtually idle on the sidelines due to low interest rates and wanted to put it to work. From there, he had to decide whether equities, precious metals or Bitcoin would be the best use of funds. "The reason we decided to buy Bitcoin is because Bitcoin represents a form of digital gold," Saylor said on the first earnings call after the company announced its strategy. "It's harder than gold, it's smarter, it's stronger, it's faster than gold." Saylor's decision created a way for investors to have stake in Bitcoin through routine purchases of stock, rather than having to buy the coins directly. Saylor, who stepped down as CEO last year and assumed the role of executive chairman, told CNBC's Morgan Brennan last week that he expects the bull market in Bitcoin to continue next year. He said 99.9% of the capital in the world is invested in real estate, stocks, bonds and commodities, with only 0.1% allocated toward Bitcoin.